Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Chris, the equity markets, quite an interesting show to watch. Giant gains, giant losses. What's your opinion?
Yeah, well, 2018 was an extremely wild year, very more so a sideways, a slightly down year. And, a lot of damage was done to the chart based on the SP 500, few other leading sectors, closing down below significant support levels that, in my opinion, have changed the tides from an uptrend to more or less a neutral/bear market territory now. And, the last 3 weeks we've had a very strong recovery in the market, and the SP 500 has rallied right up. It's only a few points away, another 10 points away or so from hitting kind of the February and April lows of 2018, where prices were closed at this level. And about 5 weeks ago, this is where we saw the equities market fall through this support and go into free fall mode. So what once acted as support, once you're below it, acts as resistance. And based on short-term analysis, the equities markets had very strong 3 weeks. Everything is actually getting to the point here where we're overbought, overextended to the upside. And I think we are due for a quick pullback. And the big question is, what size of a pullback? Double dip or just a quick multi-day pullback followed by continuation buying, and we see this uptrend continue. So that'll be the big question of what's going on here.
Right. So in the meantime, how do you position yourself waiting for this to happen?
Well, it's tough because the momentum is behind the market to the upside here. And in my opinion, if we're following on the daily chart as a swing trader, we are looking for some type of reversal candle on the daily chart. So if we get a big run up or a gap higher over the next week or so, followed by a strong wave of selling that the candle closes below the previous day's low, I think that's a sign that we're going to see a multi kind of week pullback. And there is the fear that we go down for a double dip in this market, go back down, test that 2,300, 2,400 area, and that will definitely spook traders, investors going forward here. So right now, more or less, I would be neutral until we see some type of topping candle formation. I think there's a great move here to the downside for a quick swing trade. But I do feel as though looking forward to several months, I feel as though the equities market is going to grind its way sideways to slightly higher and form a bearish formation. And eventually, in a couple months, I think we see a breakdown and a much bigger leg that it will truly confirm and kickstart the bear market.
Some people have suggested that we've seen enough of a correction that we should only see a positive market for the rest of the year. Do you feel that's the case?
At this point, to me, the market is making significant lower highs and lower lows. Russell 2000 has broken down. Transportation has broken down. Those are leading indicators of where money's going. The SP 500 is also broken down. To me, the bias long-term now is sideways to lower. I think we're going to go sideways first. I don't think we're going to break to new highs in the equities markets, but I do feel as though we could potentially see a rally back up to 2,700, maybe even 2,800 on the SP 500, which is 200 points away from where we are. So there's still some significant upside, but I think it will be short-lived, and that type of a bounce is going to get sold into by institutions, unloading shares, and trying to get into position for a bear market. So I am very bearish on the market. I'm bearish for 2019, and in the next couple months here, I am kind of neutral to bullish. So I think there's a little bit of upside going forward here, about 200 points. But overall, I am expecting the year to close out actually very bearish and much lower from where we are.
We'll have more with Chris Vermeulen right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, wintertime means cold temperatures. What does that mean for natural gas?
Well, natural gas, yeah, we had that big kind of weather-based and news-based pop in natural gas, over the last couple months here. We saw that big pop. Usually what goes straight up on news and weather comes straight back down, and that's exactly what's happened to date. We are expecting, some colder weather. I do feel as though natural gas is starting to get oversold. It is getting close to support, but the daily chart still suggests we're going to see another leg lower in the market. Right now, natural gas continuous contract is trading at about $3, and I feel as though there's potential for it to drop all the way down to about the $2.60. So there's some pretty good downside still, and I think any day we could see the bottom drop out and see this the kind of a washout low. After that, that is a significant support level. I've got swing trading cycles bottoming out here over the next couple of days, so I'm hoping we get that kind of sharp drop in natural gas down to the 260 area, and I think it should be bought into because I think there's a multi-week rally that will follow suit after that.
Crude oil, how's that doing?
Well, crude oil's been on fire the last couple weeks. We've seen a very sharp recovery. Today alone, being Wednesday afternoon, we saw a nice 5-point gain on the session, and crude oil has moved more or less out of its downward bias. My short-term trading software is showing that more or less the technical outlook has gone neutral from downtrend. So right now, crude oil is forming a base. It is overbought. It's at resistance. Really, I don't see it moving much further than 54.75. Really, it is stuck right at key resistance right now at around this 52 area. But I do feel as though we're going to see crude oil consolidate for a week or two, but then I think it's going to be off to the races, and we could see a pretty strong couple-week rally to bring us up to that $60 per barrel mark.
Now, is there anything behind it? Any news, or is this more of a cycle?
This is more or less based off of pure momentum, price action, volume. The power behind this current move has got a lot behind it. If we do get a little consolidation here, it should continue to extend up to that 57, 75, 60 area. So it's not so much based on news. Typically, the way I see it is this move is happening, and the news will come out in a week or two, and everybody will go, oh, that's why crude oil was rallying, because this news came out. I see news as a lagging indicator. By the time you've heard it, it's already kind of baked into the cake, unless it's a surprise news. But that type of news is, like I said with natural gas, it's usually a quick, what goes straight up comes straight back down within a couple of days. So I like to focus on the technical standpoint. To me, this is a big pattern on the weekly chart, and I think there's quite a bit of upside after we have a little consolidation here for a week or two.
We'll have more with Chris Vermeulen right after this.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Gold, are we looking at gold bullion, gold certificates, gold miners? What's happening with gold?
Well, overall, as a safe haven play going forward in 2019, to me, if somebody wants to play the precious metal sector, I do feel as though physical gold, whether you've got it in your hand, physical gold, or you buy an ETF that more or less owns physical gold, I think that is the safer play. We've seen it happen before where when a bear market kicks in, we can see the precious metals miners completely tank and sell off while gold holds its value or potentially even rallies going forward. So, if we're headed into a true bear market, which is what it looks and feels like we're doing, over time, I think you want to be into the physical gold until the bear market has more or less starting to show signs that it's bottoming. That's when you want to look at the gold miners, because that is when they have humongous gains and rallies. And we've seen it happen after pretty much every bear market cycle in equities. The precious metal sector comes out roaring usually first and just continues to extend in a huge way. So I think the time now is physical bullion, and in due time it'll be the gold miners and silver miners that you want to get involved into later in this year, maybe even early 2020.
What kind of shape is the U.S. dollar in?
Well, the U.S. dollar, it's been slowly rolling over the last few months. We've seen it break some support trend lines, formed a little topping formation back in November, December, broke down mid-December, and now it's starting to pick up speed with its kind of first real leg to the downside. Today it's down 0.75%. I feel as though it is going to continue to move lower. Of course, it won't go straight down, but overall I do expect it's currently trading at 94.78. I do expect it to kind of work itself down to this 93 level. So there's still some pretty good downside potential there, which will help boost commodities. We could see precious metals, even crude oil, perform a little stronger with the falling dollar.
What about agricultural commodities? Sugar had a big pop the other day.
Yeah, the agricultural stocks, or more or less index of basket, they've been underperforming for quite some time. And I do feel as though there's going to be a time when they really perk up. Right now, they're still kind of in an overall long-term downtrend, and they just continue to really struggle. Now, if we can start to see a decent move here, we still need quite a bit of upside move in ags in general before that whole kind of sector or group is in a bull market. So I'm not too bullish or bearish. I'm just neutral on that market. Right now, it's short-term trading at short-term resistance in general. So I don't have a whole lot on the ag sector right now in terms of a trade.
Do we have news from the cryptocurrency front?
Yeah, well, Bitcoin's actually on the daily chart looks very bullish. It's formed you could argue an inverse head and shoulders or a little cup and handle formation. The last 3 trading sessions, it's been trading right at the neckline or a breakout trend line. It hasn't broken yet, but overall, we've seen this pattern in Bitcoin unfold a couple of times in the past, and each time it led to a very explosive pop and continuation rally. So I do feel as though Bitcoin has got the potential to rally up to the $4,600 or $5,000 mark very quickly if it can break out of this. So overall, it looks really bullish. I think it's worth a shot to get long here, and you could set a stop under the recent low from about a week and a half ago. Overall, Bitcoin is looking primed and ready for a pop and rally.
What kind of numbers are we looking at there?
Yeah, Bitcoin, I think we'll see it go up to around 4,600. And if it can break through that level, then the 5,000 mark is going to be a natural kind of resistance level. It's more or less a halfway mark between the recent move, and it's also a whole number. So a lot of people who own Bitcoin who are underwater, they're going to say, well, if it gets back to 5,000, it's just a solid whole number that comes to people's mind. These whole numbers like 4,000, 5,000, 6,000 are very kind of mental numbers, mental resistance. So when it gets to that level, if it does here, there should be a lot of selling stepping in of people saying, just get me out at 5,000, and it'll create more or less resistance.
Chris, anything else that caught your eye?
That's really about it. Like, I do feel as though, I think the big things right now is, I think the exciting setups are, Bitcoin for a pop higher. I think natural gas for a quick drop over the next couple of days, I think is in play. And, the overall equities market, I think we just look for a reversal bar on the daily chart, and I think it's good for some, quick gains to the downside. Really, the market right now is high volatility, big moves, big swings, and everything is trading at either support or resistance. And the big question is, are we going to see trends reverse and we're going to see breakouts, or are things going to be reversing at those resistance levels back down? So it's a tough time to trade. You got to get in, get out with short-term signals at this point until a new uptrend is confirmed in equities.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen from thetechnicaltraders.com. You're listening to HowStreet.com Radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have any questions for Chris or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.